Okay, so hey everyone, and welcome back to another episode of The Full Global. This is where we connect with global first entrepreneurs and remote work experts from all around the world to share their experiences. Our guest today is Ohad Samet, co-founder and CEO at TrueML. Ohad, thanks for joining us today.
Thanks for having me.
As the CEO and co-founder of TrueML, your journey from PayPal to Klarna and now to TrueML is kind of fascinating. In fact, so could you maybe give our audience a quick overview of your background and what brought you into the fintech industry? Maybe just highlighting some pivotal moments in your career.
Yeah, absolutely. So out of school, out of university, I was looking for a job, found a place where I was the fifth employee, and I actually didn't know what startups were. I didn't know what fintech was. I didn't know any of that. But as the years went by, it took 3 years, that company became Fraud Sciences, a global leader in fraud prevention. And I joined in 2005, and in 2008, we sold to PayPal in PayPal's first ever acquisition as an eBay company. So that was very new and exciting, and kind of opened my world up. And I worked for PayPal, who moved me to the Bay Area, which was very, very cool to experience. I lived in the Bay Area for more than a decade. I left PayPal in 2010. I started working on a few projects. Two of them became companies. One is called Signified. It's still running with my co-founders. And the other was called Analyzed, where we did consumer credit underwriting. And Analyzed was acquired by Klarna, a Swedish company, in 2011. So I joined Klarna's management team and ran risk and underwriting, credit, and so on. And then when I wanted to go back into entrepreneurship in 2013, I started working in TrueML based on the stuff that I've learned at Klarna, at PayPal, and other places. So it's been always like startups and large companies that acquired them, and a lot of luck in the meantime, in between.
Mm-hmm. Awesome. And just correct me if I'm wrong. You've lived in Sweden, in the UK, and you graduated from Tel Aviv University, and now you're based in California, right? That's quite diverse geographic background. Am I right?
Almost. I grew up in Israel, moved to the Bay Area, started splitting my time between the Bay Area and Sweden when we got acquired by Klarna. And then after I met my wife and had kids here and so on, post-COVID, I lived most of my time in Sweden. So about 30 years in Israel, about 10, 12 years, depending how you look at it, in the Bay Area, and then a few years here in Sweden.
Awesome. That's really quite a diverse geographic background. So how have your experiences in these different locations, countries, cultures shaped your approach to business and maybe to fintech?
It's given me, so the experience in Klarna was very interesting. When you look at Fraud Sciences work in Israel is, for many reasons, an isolated market, at least when I was there a long time ago. It didn't have a lot of commerce with its neighbors. And the Middle East was not very developed in terms of technology back then. Now it's actually pretty big. And so Israel was selling mostly to Europe and the US. So it was, I would say, very US centric. And then I moved to the Bay Area, and in the Bay Area, for those who've lived there and visited, I mean, it's unparalleled in terms of the energy and everything there. And then when I experienced Europe, which is very different, much slower. I don't think I would say I would be very controversial by saying a little bit less ambitious than the US. But on the other hand, the fascination, the challenge of localization, like going to different markets in Europe where you may have some unifying regulatory oversight or framework, but you do have different markets that behave very differently, was very interesting to experience. It's very different than individual states in the US. in terms of the difference in culture, in how people want to pay, of course, language, and so on. So those were very interesting experiences to have.
Awesome. That's very very interesting insight, and I agree with that. So let me then rephrase a bit my question from your time at like those large organizations like PayPal and then Klarna.
Mm-hmm.
What key insights have you brought to your startup to TrueML that have driven your growth and maybe innovation in the fintech space?
Yeah, so TrueML, we developed technology that radically changes the experience for consumers in financial distress. Either with SaaS technology that we sell to financial institutions, or through our business unit, our subsidiary, Through Accord, which competes with traditional collection agencies, and we turn the debt collection process from calling people aggressively and all that stuff to very low key, asynchronous, digital based experience that really gets great reviews online from consumers who go through the process. And we're at scale. We work with about 26 million active accounts, almost 200 different companies. And so the idea, first and foremost, came from working at Klarna, because when when you underwrite a lot of loans, billions or tens of billions of dollars in loans, which is basically what buy now pay later is, you realize that it sounds trivial, but if you don't ask for the money, if you don't remind people to pay, a lot of people are just going to forget. And I am of the strong opinion, that people are basically good and they want to pay, but they need reminders and need help. And so if you don't do servicing, if you don't think about what comes after it, after having underwritten the loan, you don't hit your goals. And I became very frustrated with how little attention was given to technology in that collection and to digitizing and renewing it. And I felt like we could build a really big company and really create a lot of impact by building a company that focuses on this underserved segment. So that's insight number one. Insight number two was that B2B2C, the way Klarna makes money today is to a large degree, and I think Affirm does that as well, by cross-referencing or cross-referring consumers that it has interacted with at one merchant to another merchant. So they generate traffic for merchants. And the power of that model, where if you offer merchants or clients a valuable service that they don't want to do themselves, they will allow you to create a relationship with the consumer around that world, around that domain. And I felt that, as counterintuitive as it sounds, we could build a brand in debt collection where consumers who are in trouble will say, well, not only did I have a good experience with these guys when I need to pay my debt, maybe they can help me with other products as well. And it's not something that we're doing right now, but it's something that we'll absolutely do in the future. We are very committed to helping consumers find the on-ramp back into the regular financial services, because once you've been in debt collection, that option, you're almost irrevocably locked out of that, and we don't want that world to exist anymore. We want to take care of
that. So tell me, could you tell me how then TrueML is changing the game right now, particularly with your a product that's called a True Accord, yeah? So your debt recurring collection platforms, how is it different from what we have in the market?
So, we've been around for 11 years now. So we are the market, right? We're the market leader. We've defined the market. We're the biggest ones doing what we do. Before we came on the scene, debt collection was kind of like a telemarketing campaign. Call consumers a lot, get them on a cold call, convince them to make a payment. Very pushy, very boiler room style, very almost yelling at people, doing everything possible while not violating regulations, which was quite a lot of negative stuff. We turned this whole experience into you, the consumer, are in the center of this. You have the agency. You engage when you want to engage. You do that without having to talk to a person. 96% of our resolutions are completely automated. Consumers don't want to talk to people. The other 4% call or email into a call center. They don't. It's not people that we catch on the phone. They decide to contact us. And people pay more than they would with a traditional service. So we've proven that product works, and it works better, and consumers prefer it. And then we lobbied for, and I believe brought into the world federal regulation that changed the way collection is done in the U.S. So now everybody has to adopt our model. So we're actually seeing more traditional debt collection agencies failing because they're unwilling or unable to move to a digital world. And I don't think that's a bad thing. I think that's a good thing. Of course, those who can move and service consumers the way they want to be serviced will be successful.
That's awesome. And going back to BNPL, right? So I'm just curious. While I've been heavily involved in the recruitment business, a couple of years ago, we tried to launch this feature, hire now, pay later. So that is similar to BNPL, but tailored to our niche, right? So because at that time, recruitment fees were around like 30% of the annual salary. So companies had to pay like a 40, 60K per hire, which was tough for many of those startups. But frankly speaking, we didn't see much interest back then. I don't know why, but but with today's landscape, how do you see this BNPL model in the B2B services landscape and in the global B2B transactions might be relevant? And maybe do you have any specific examples or business case studies where this model is relevant?
I think we need to separate between what BNPL is, which is a very narrow thing, and places where we call a loan or factoring or something else buy now pay later.
Okay.
You're talking about paying on contingency or having, plus 90 or something like that payment terms. I wouldn't call that buy now pay later. I mean, we can call that a lot of things, and we can brand it very nicely, but I don't think that's buy now pay later. Buy now pay later is something very, very specific. Very specific. It is an e-commerce based delayed payment solution that is aimed at reducing friction at the point of sale. This is not even point of sale financing. So if somebody buys a Peloton, you look at what Affirm does, and somebody buys a Peloton or I don't know what, and they're paying it in tranches, that's not buy now pay later. That's point of sale financing. And if you look at how that product is offered by Affirm, its mechanics are even different. They underwrite that with a bank versus the pay by four. So the pay by four model is great, can even be a potential loss leader on first transaction. It's a way to reduce friction and get to know consumers in a high frequency, high velocity, low average payment industries like fashion, like gaming, stuff like that. Once you get to other modalities, we can call it buy now pay later. I don't think it's buy now pay later. We have merchant loans, we have cash advances, we have point of sale financing, and regardless of what we call it from a marketing perspective, in the back end, they're very, very different.
Okay. Thanks for clarifying that. So probably that's the reason why it didn't work in our case. Yeah, so we tried to market it in a wrong way, kind of.
Yeah, I think I don't know about your specifics, but I think it's a question of need. Okay, why has buy now pay later grown so much in the past years, and not before that? Because Americans in the US specifically, because Americans have always been very, very loyal to their credit cards and credit card reward programs. You can say it's a generational thing. It's possible. People managing their cash flow and wanting to only borrow versus specific transactions. I would agree with that. I don't think we have a lot of proof. But the other very convincing thesis is that with payday loans being regulated out of markets, consumers had no way of managing the payments around their paydays. And being able to delay a payment to pay by four and manage the cash flow that way was very, very helpful. That's another reason why, and that's the reason why we have another product, which is earned wage access, right? Where it's like instead of being paid in a couple of weeks, be paid now for a specific for a commission. Um, so sometimes it's regulatory changes that generate specific needs, and I think the question is whether the need exists. If the need doesn't exist, I agree with you. It doesn't matter what you call the thing.
Yeah, that's true. Okay, so I know that your companies, you have focused primarily on the U.S. market, right? But I guess it was in some of your previous podcasts. You've mentioned this possibility of expanding into other countries, right? So, from your perspective, what unique challenges and maybe opportunities do you anticipate as TrueML considers like international expansion, especially maybe in the regulatory complexities in different regions, cultural stuff? Any thoughts about this?
I have managed a company partially remote for a long time because I split my life between the US and Sweden. So we've always had that tendency post COVID. I wouldn't say we leaned into it completely. We have regulated subsidiaries that need offices. But to the extent possible, we hire talent where we can. We have engineering teams in South America. We have servicing teams or servicing vendors in India. So we definitely look for the talent where the talent exists, and there is talent elsewhere. Especially once you get to a few hundreds of people and you have more defined roles and needs. In terms of going into markets, look, we operate in a highly regulated environment by design. And that means that going into new markets is something we have to be very careful about to be able to do the right way. But yeah, the opportunity is there, and we will take it. But the US is such a big market that we continue to be focused on it and continue to see success there.
Yeah, it totally makes sense. And you mentioned that you hire like team members in different countries. So, what insights can you share about creating a productive remote work environment in this such a tech driven company like TrueML? With all those like maybe blockers that you have in terms of compliances and so on.
Yeah, I mean, compliance is eventually, in terms of where people are, we figured that out with our clients and with our regulators and so on. I think, the world has made such a huge leap into working remotely in post-COVID. It's much easier now. When the majority of your employees are not in an office day in, day out, or at least your exempt employees, it's easier to enforce. Because, pre-COVID, you could have 10 people in a room and then 2 people remote. That is not very productive. That's really difficult to do. When you have the majority of people online by their laptop and knowing how to handle that, it's a lot easier. There are better tools now to create team spirit and connect people around fun activities. You do attract a certain people who want an office. They go and work in jobs where they can go to an office. And I gotta tell you, I am not opposed to that. I would love to go to an office a couple of days a week, but not every day in the week. But then there are people who feel very strongly about that, and they will work at a place where they're going to go to an office. So I think people are self-selecting into these jobs where you feel comfortable with the remote work environment, and they have that option. I think that's really cool.
Awesome. So investors, right? I know that TrueML has attracted support from big names, big investors, right? So
Mhm.
how this backing shaped TrueML's like a vision and maybe path forward, and maybe what unique value do these partnerships bring? Can you talk more about this, because we have like a lot of founders who are listening to us right now, and maybe you can give some tips, or just some insights.
Um, it's a very broad topic, and I can approach it in many ways. I would say number one, don't take venture capital unless you know you have the business that requires it and can efficiently deploy capital. So it's not a dig on VC, but a restaurant will not take venture capital, and a lot of software businesses don't need it. And we confuse raising venture capital with success. This is not the same thing. Okay, so that's number one. We knew we needed to invest a lot of money to succeed and to break into this very complicated market. So we knew this was a VC company. We also knew that by taking VC money, we were setting ourselves on a path where we needed to offer an exit, where we need to have a certain growth in valuation, growth in company, focus on growth, focus on those things. And we did it, but it was definitely um, uh, it definitely impacted our decisions about, for example, how quickly to onboard clients and what trade-offs to make and so on, which in hindsight, if we had unlimited money, not from VC, or if we were self-funding, we would make different decisions. I don't know if better decisions, but different decisions. And finally, I really like working with Arbor, like working with Melissa Gazis on our board. I think investors and founders need to work hand in hand, but not confuse each other's roles. Her job is to hold me accountable at the board level, which means that sometimes we have tough conversations. And I think that outside of the 5 minutes where we argue, before and after, we're both very happy with the relationship, and we both appreciate the fact that we're willing to have those discussions. Um, and and for that, like, I'm very thankful. So I say it on every stage. Investors are great as long as you know what to expect. They're not your friends, and it's not a bad thing. They need to hold you accountable to the money that they gave you. You have to accept it that way, and you have to find a way to make that relationship productive. And if you do, it's going to be incredibly productive.
Yeah, that's very good advice. um okay. um Hosting the War Room podcast
Mhm.
has given you a chance to explore this the what is called oh shit moments experienced by
Mhm.
other founders and executives, right? So can you
Yeah.
share maybe some standout lesson or piece of advice you have gained from those conversations, particularly around like a navigating challenges in the entrepreneurial journey?
Um, it's funny. The thing that I wrote, I have a blog where I post every once in a while. Um, and I wrote a blog post a few years ago called Bad Monkey. It's about the fact that running a company is like having a monkey on your shoulder yelling at you all the time. You can't disregard it, and it's very noisy. And people really respond to it, like they share it and so on, because that's kind of the feeling of running a company. Even when it's fun, it doesn't let you go, right? It's very, very, it makes you very obsessive. You think about it all the time. And I started the podcast. And by the way, stop doing it because sourcing, like getting people to go on podcasts is a full-time position. I just can't do it. But the few conversations that people were very kind to share with me, I think they were all iterations on exactly the same thing, which is even the most successful companies and founders have these moments, and the difference is that they survive them. Whether they worked hard, definitely. Whether they were smart, definitely. Whether they were lucky, absolutely. Right? All the combination, and kind of like unpacking that and being honest about that, because I felt that there were, when you hear people talk about their companies, there are only two extremes. either we're killing it, it's amazing, we're great, and so on, or oh, we failed, and this is why, and here are all of my mistakes. And the reality is in the middle. The reality is that we screw up all the time. Our companies feel like a dumpster fire 80% of the time, especially when they're successful, and we're successful, right? Because we overcome stuff, not because we don't experience the difficulties. I just wanted to find that level of camaraderie. So that was my biggest takeaway, exactly what I wanted, which is a bunch of smart, successful people talking about places where they were struggling but made it through.
Yeah, that's really resonates with me. What you have just said. Okay, so probably my last question. Looking ahead, what are your aspirations for TrueML in the coming years?
I've always said this is my last company in the sense that I want to continue to run it forever, as long as I can. Which means that I have the benefit of being able to plan with a very long horizon in mind. A year and a half ago, we acquired made our first acquisition, acquired our first competitor, traditional competitor, and converted them into our model. We will do more of these acquisitions. We are hoping to offer a home for fintech companies that have done well in terms of team and product building, but have not found the distribution that they wanted. Companies that can offer solutions for our consumers who are in distress. Like I said, it's more than 26 million consumers and growing in the US only, but we will get international as well. And I will continue to chase the overall mission of TrueML, which is making sure that no one is locked out of the financial system, which means that we don't only help people repay debt in a way that they find almost delightful, but also we give them additional tools to find that on-ramp back into financial life. So that is my the long-term arc of our mission, what I'm trying to do. And I hope to do that with talented people who are empowered to work. This is one of the benefits of my job. Or at this stage, I get to talk to you because I have very talented, very fierce executives who are very well compensated, who in turn hire talented and fierce VPs, in turn hire talented and fierce directors, and they all work within their domains to make their domains amazing. And we work together as a team to get this done.
Yeah, that's amazing. Thank you very much, Ahad, for this insightful discussion on fintech innovation, on remote work, and on TrueML's journey. Wishing you continued success in shaping the future of finance. Thank you very much.
Thank you. Thanks for having me, and good luck to you and your listeners as well.
Thank you very much.